Good morning, hello, and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is a fresh week, and certainly it has been a change of frame today because I'm coming to you from Bank Mutual Fund Summit, where ACE Fund ahead and what should your portfolio strategy do? Keep an eye out for that. But yes, had the results over the weekend, and now more than 160 companies will be reporting their September quarter performance this week as well. So today, the trends in the GIFT Nifty is for now suggesting a positive start. Globally, also, we are standing at a good front because from US markets to Asia Pacific markets, it has been a turbocharged rally. New milestones have been achieved. If you look at the US markets, they were at all-time highs. We saw that the Dow has surged above that 47,000 mark for the first time ever as well, after the softer than expected inflation report that came in. Now, this is also the first report that is coming in from the US, thanks to the ongoing US federal shutdown as well. So yes, all in all, the US markets were on a strong footing and on the Friday session as well. But coming to the Asia Pacific markets this morning, we did see some good moves coming in from the Japanese Nikkei 225, which has crossed that 50,000 mark for the first time ever this morning as well. Given that investors have been cheering the progress of talks between the US and China ahead of Trump's meeting ahead with Xi Jinping on Thursday this week itself. But yes, we'll watch out how all of these cues will shape the tone of the trade today. Stock-specific action will be continuing in today's session as well, given that the companies will be reporting their second quarter performance today itself. We'll also be understanding how certain stock moves, for instance, Kotak Bank, Coforge did report their results over the weekend and on Friday itself. So we'll be discussing all of that. As well. Also, we'll be taking stock-related queries. So, keen deeper. Let's take a quick look at the top headlines, Sasa. US-China agreed to a framework of trade deal ahead of Trump's meeting with Xi Jinping later this week, confirms Treasury Secretary Scott Bessent. He also says that Donald Trump threats of 100% on Chinese, quote unquote, effectively minerals with Thailand, Malaysia, Cambodia on tighter export curbs of rare earth metals by China. Wall Street Friday session on a record high following the rate cuts by the US Fed, the Dow, while the 10-year Treasury yields hovered around 4%. Asia Pacific markets have also opened higher amid progress of trade talks between US and China. The Nikkei 225 has crossed 50,000 mark for the first time ever, surging 2%, while the GIFT Nifty has indicated a positive start for our own markets. Crude oil prices are back above $66 per barrel, while gold prices also declined, marking their first weekly loss in 10 weeks. Dr. Reddy's and SBI Life second quarter results were a beat on expectations on most parameters, while Kotak Mahindra Bank posted an inline set of performance with the net interest income growing but margins contracting for the second quarter in a row. All right, if you take at the cues of the trade, of course, we did see that in the past 15 trading sessions, Nifty has rallied about 1,500 points and is set to register the best monthly performance since March itself. So yes, last week we did see it was a truncated session on the back of the Diwali festivities, but overall the markets were on a strong footing and, it was the fourth straight weekly gains for the Nifty as well. Now, the next resistance level that is watching out for the Nifty is whether that Nifty can mount above that 26,000 mark itself. So we'll watch out in today's trading session if that takes place. Other than that, if you look at the Bank Nifty index, that is also down by about 900 points from its record high levels. However, we did see some reports that came in from Kotak Mahindra Bank earlier this weekend itself, and the management commentary has been quite positive because they have been, they've said that they'll be watching out on how the loan and deposit traction takes place in the second half of the fiscal year, and whether or not credit cost is something that they can keep in control going ahead in the second half as well. So, stock specific action will be continuing from the financials back as well. But yes, going ahead into this week, over 160 companies will be reporting their second quarter performance. So we'll be watching out for more details as well. Some of the Q2 results which is lined up for today, JK Tyre, Adani Energy, Bata, these are some of the companies which will be reporting their second quarter performance as well. But yes, some of the other cues that we'll be watching out for this week, that is your Fed meeting, which is due on Wednesday. The street is estimating that the Fed would continue with about 25 basis point rate cut in this week itself. And we'll be watching out on what for what US Fed Chief Jerome Powell has to say on the back of this as well. Apart from this US China meeting, like I was talking about, some progress on the trade framework. But yes, we'll be watching out and progress on how Trump and Xi Jinping's meeting on Thursday takes place, and what the markets will be watching out from that front as well. But yes, coming to the flows perspective on where FI fund flows stand at this point of time, FIs have stood as net buyers buying stocks which is worth about 863 crore rupees in the cash markets. DIIs have stood as sellers selling stocks which is worth about 100 crore rupees in the cash markets as well. Coming to the option queues data, Nifty put call ratio dropping to about 0.76 from 0.95 levels in the previous session. So the risk reward has been quite fair. At this point of time is where the risk reward could be turning favorable for the markets as well. Coming to the FNO ban, where we stand at this point of time, SAIL and Saman Capital are some of the stocks which have entered the FNO ban list. And the stocks that have been retained and removed, none of the stocks have been removed as if at this point of time. So yes, that was the cues that will set up this trade for today's trading session, and we'll be watching out on how everything stacks up on the charts as well. If you look at the pre-open rates, it is looking like it's a positive start for the markets. Sensex up about 79 points. Nifty is also above that 24,800 mark as well. So yes, both of them have been doing quite well at this point of time. So yes, we'll be getting to our technical expert of the show as well. We'll get in our technical expert of the show. Joining me is Rajesh Palviya, who is the Senior Vice President Research at Axis Securities. Rajesh, good morning. Nifty has gained about nearly 5% this month. So can it see crossing 26,000?
Good morning, Lovisha. Yeah, so this is very strong, month for the Nifty, and if we look at the series on series performance, Nifty has almost, on an edge of giving breakout of 26,000. Yes, we do believe the kind of buying action which we have witnessed in last couple of weeks, and broader market has also participated in this rally. So we believe that, yes, maybe on expiry day or maybe post expiry, we could see a Nifty to cross 26,000. As major call concentration area is still placed at 26,000 level. So if at all Nifty manages to cross 26,000 level, then yes, we may witness short covering action, and then further extension of rally could be there at towards 26,200, 26,350 kind of zone also. So we are holding our bullish view, and we believe that maybe in next couple of week we could retest a new all-time high trajectory also for Nifty, as global cues are also supportive, and we have witnessed FI flows are also on the buying side in last couple of trading session. So the kind of confidence which we are witnessing on the across the broader market, we believe that yes, maybe we can see a new all-time high trajectory in next couple of weeks. Bank Nifty is also holding the important support area on the near term chart. The way Bank Nifty is holding above 57,500, I think if it continues to trade above these level, possible really can extend to 58,000, 58,200 in the continuation of this up move. So Bank Nifty and Nifty both are holding the strength, and I think one should adopt a strategy of buy on dips for Nifty as well as for the Bank Nifty. On the downside for Nifty, one should keep stop loss towards 25,500, and for Bank Nifty, the stop loss should be placed at around 57,400. So any minor decline should be used as a buying opportunity, and we believe that this momentum can extend further.
Next, of course, we had some results over the weekend as well, with Kotak Mahindra Bank also coming out with its performance. So, how do you stack up? How do you make sense of these charts? Kotak Mahindra Bank versus HDFC Bank and ICICI Bank.
So we have witnessed, a buying action in most of the private as well as PSU banking basket in last couple of week. But if we analyze the Kotak Mahindra Bank, some profit taking at higher level has been there. But looking at the long-term structure, we do hold our bullish view for Kotak Mahindra Bank. The near-term resistance is placed at around 22,000, 2240. If at all stock crosses about 2240, I think there would be a breakout on the weekly chart of rounding bottom formation. And once this breakout takes place, I think the new trajectory for the stock would be around 2350, even 2400 in the on the higher side. So here we are holding bullish view on the downside. One needs to keep stop loss towards 2140, and I think till these levels are intact, one should use any minor decline to as a buying opportunity. About 2240, one can add more position. On the ICICI Bank, there was a profit taking at higher level, and now stock has slipped below to 50-day as well as 20-day moving average. Looking at near-term structure, there is a slight weakness on the ICICI Bank structure. Though on the higher side, 1400 is the key resistance area. If at all stock manages to cross above 1400 level, I think we could see some short covering action to initiate in this counter. But on the longer term perspective, yes, stock is holding strength. So those who are looking for investment point of view, yes, they can use this decline as a buying opportunity. On the downside, 1340, 1320 are the good support area to buy and accumulate this stock. But from the banking basket, I think PSU banking basket is showing a sign of strength, and I think SBI is looking more promising. The way stock managed to give breakout on the long-term chart, I think if it continues to trade above 890 zone, I think SBI is a strong stock from the banking basket, and we believe that if it's able to sustain above 890, possible rally towards 935, 940 we may see in the SBI going forward.
Okay, all right, all right. All right, Rajesh, the top underperformance last week itself. So, how do we see this week?
Uh, so, so I'm not getting your voice. I think there is some voice crack.
No, can you hear me now, Rajesh? Better?
Yeah, yeah, yeah.
Okay, okay. We'll just get to that in a bit. We'll just address the open first. Well, Nifty has opened up with about 1/10% gain at this point of time. Above that 25,800 mark for the Nifty at this point of time. So, of course, it's a good start given that the overall global cues also remain quite solid at this point of time. So, yes, overall the global markets were also quite. Let's take a look at Sensex. Sensex also doing well. 200 points gain coming in for the Sensex as well. Bank Nifty has also opened with some bit of a strength. 1/10% gain coming in from there as well. If you look at the broader end of the markets, mid caps showcasing the gain of about 0.3%. On the other hand, if you look at small caps, also with flat, however, with a positive bias as well. All in all, majority of the sectors have also been swinging into the positive territory. We'll touch base about that as well in just a bit once the rates settle in. But yes, coming to the sectoral indices, pharma index is seeing a bit of a profit booking. Has opened with a flat but with a negative bias. But if you look at the Nifty Auto Index, 0.1% gains coming in for there as well. Nifty Auto Index has been doing well. Nifty IT is also showcasing some strength with about 0.2% gains. On the other hand, if you look at Nifty Realty Basket, 0.5% gains coming in from there as well. On the other hand, if you look at the Nifty Bank Index, Bank Nifty Index has opened up with about some strength. If you look at Bank Nifty Index is showcasing some gains of about 0.1% gains as well. Coming to the top Nifty losers and gainers, where we stand on the charts. If you look at SBI Life, that is doing well, nearly 3% gains coming in for the counter. On the other hand, Tata Consumer Products is also showing some resilience with about 1.5% gains. Tata Steel with about 1% gains. Shriram Finance doing well with about 1% gains. Reliance Industries with about 0.8% gains. On the other hand, if you look at the top losers on the Nifty 50, of course, the management did highlight about the credit costs, which can be controlled for the second half of the fiscal year, and that is why you can see some brokerages also remaining cautious on the counter. Kotak Mahindra Bank seeing a cut of about 2% at this point of time. Dr. Reddy's Lab, after its Q2 performance, it is one of the top Nifty losers as well. 0.9% decline coming in for there as well. Bajaj Finance, Max Healthcare, both of them showcasing a decline of about 0.2% each as well. But yes, let's come back and talk about Dr. Reddy's Lab. Coming to you, Rajesh, one of the top Nifty losers, that is your Dr. Reddy's Lab. If you look at the Q2 performance, the net profit is up about by 7% on a year-on-year basis. Our revenue was up by about 10% on a year-on-year basis. But the stock has been an underperformer this year. And today also, the stock is one of the top Nifty losers. How do you make the moves, and what can we watch out next?
So there is an reaction of results, and looking at the near-term, short-term structure, stock is still consolidating in contracting triangle formation on a weekly chart. And looking at the structure, 1320 is the key resistance area for Dr. Reddy. So if a stock manages to cross about 1320, there would be a breakout of contracting triangle, and then possible target on the higher side would be around 1370, even 1400 on a positional perspective. But looking at the near-term structure, stock is now trading near to its important support area of 50-day moving average, which is placed at around 1265. So if stock able to absorb all this supply pressure around 1260, 1250 zone, so I think we may see some recovery going forward in this counter. So those who are already long in trade can hold the position, but follow the stop loss of 1250 if you are on the long side of trade.
Okay, all right. Let's also talk about Coforge. The stock is seeing some good traction in today's trading session. Nearly 5% gains coming in for the counter after its September quarter performance. We did see that the revenue was growth was in line with the expectations to about 6%. EBIT margin expansion was also of about 80 basis points. The management does believe that the second half of the fiscal year will continue to see robust growth. And since fourth quarter is a seasonally good quarter, so they're seeing some good moves coming in for the second half of the fiscal year as well. They also expect margins to be at 14% for the full year. That is why we can see some good traction coming in for Coforge as well. Rajesh, coming to you, the stock has done well in the past 1 month, and today also the stock is seeing some good moves. Can we expect this trend to continue?
Yeah, so Coforge is outperforming to all its peer company, and the way stock managed to give breakout of near-term consolidation range. This is I think this is the fifth consecutive week where stock is making higher high-low formation, which is a sign of sustained buying action is taking place in this counter. Looking at the near-term, short-term structure, I think till stock is holding above 1800 level, I think trend is likely to exhibit on the bullish side, and any breakout above 1850 can take this stock further higher to 1900 level also. So I think buy and accumulate would be the strategy for Coforge on the near term as well as on the short term perspective. On the downside, 1790 needs to keep as a stop loss to buy and accumulate this stock.
Okay, all right. That is the view coming in for Coforge as well. Good stock moves that is coming in. Nearly 4% gains coming in for the counter as well. All right, let's move on and discuss about some of the viewer queries that is dropping on our live feed. The first query coming in from Naveen. He's asking the view on Mazagaon Dock on how the counter looks like on the charts. Rajesh, coming to you, the stock is in today's trading session. The stock is showcasing a gain of about 0.4%, but it has been consolidating in a range. So what can we expect the next moves to be for the near-term perspective?
So since last couple of days, stock is trading in very narrow price range, and looking at the near-term, short-term structure, stock is almost trading near to its 20-day, 50-day moving average, which is placed at around 2800, 2820 zone. Any breakout over 2830 can take this stock further higher and possible rally towards 2900, even 2940 we may see on a positional perspective. So wait for breakout of 2830 on a closing basis, then one can add more position. On the downside, now one needs to keep stop loss towards 2775. These needs to keep as a stop loss for near term as well as for the short term trader.
Okay, all right. Let's take another viewer query on that note. We have Naveen has also been asking the view on Federal Bank on how the counter looks like for the near term. Federal Bank past 1 month, 20% gains. Rajesh, what can we expect the next moves to be?
So one of the strong candidate from the banking basket and the way stock managed to view breakout on the long-term chart. If we analyze on the monthly chart, there is a breakout of almost 1 month, 1 year, time frame. Looking at the breakout, we believe that till stock is holding about 218. I think trend is likely to exhibit on the bullish side. So buy on decline would be the strategy with stop loss of 218. On the higher side, once stock crosses about 235, the rally can extend towards 250, even 260 zone also on a positional perspective. So buy and accumulate would be the strategy with stop loss of 218 for Federal Bank.
Okay, okay. All right. That is the view coming in for Federal Bank as well. With that, let's move on to our next query. We have PBC who has been asking the view on Samvardhana Motherson for the long term. He's saying that he wants to buy at the current market price. Rajesh, the stock has been an underperformer this we've had tariff news also, which is this is the current right price where he can start buying at this level.
Yeah, I think yes. If your horizon is for long term, yes, you can buy and accumulate this stock as stock is showing a sign of strength on the near term as well as on the long term chart. So looking at the near term as well as long term structure, we believe that till stock is trading above 95, 98 level, I think one can buy and accumulate this stock. Once stock manages to cross above 110, 112 level, I think stock has potential to regain again, back to its all-time high trajectory also. So we are holding bullish view on the longer term perspective. 140, 145 would be the target. Buy and accumulate would be the strategy. 95 needs to keep as a stop loss for Samvardhana Motherson.
Motherson as well. Let's take another viewer query. We have NS who's been asking the view on Indian hotels because his buying price has been at about 770 rupees. He's asking whether you should exit and shift to Lemon Tree or hold Indian hotels at this point of time. 770 is his buying price. Rajesh, what would you suggest for Indian hotels? Right now, the stock has been trading below his buying price, but still at about 736 levels.
So Indian Hotel is a sector leader from hotel and hospitality industry, and the way long-term charts are shaped up, I think if your horizon is a little longer period, I think you can remain invested in this counter. Long-term structure is bullish, but yes, on the near-term perspective, some consolidation and some mild bearishness is there in the stock prices. But looking at the long-term structure, I think till stock is holding above 700, 690 zone, I think trend is likely to exhibit on the bullish side only. Though stock is still witnessing supply pressure at higher level around 750, 760 zone. So any breakout above 760 can take again stock back towards 830, 840 kind of level in the near term as well as on the short term perspective. So if your horizon is for long term, you can hold your position. Buy and accumulate would be the strategy. On the downside, 690 needs to keep as a stop loss.
Okay, 690 as a stop loss for Indian hotels. All right, let's move on and talk about one particular stock in today's trading session, that is SBI Cards. If you look at the counter, the stock is seeing a decline of about 3% at this point of time. We did see that the company reported its second quarter performance, where net profit has grown by about 10% on a year-on-year basis. Revenue has also grown by about 12% on a year-on-year basis as well. However, brokerages also, if you look at Jeffries, Jeffries has given out a hold call on the counter, and they believe that the second quarter profit has been below estimates as well on the back of lower NIMs and fee income. And most of the asset quality, while most of the asset quality metrics is improved in second quarter, but it still indicates that the stress is abating at this point of time. So yes, they have cut the FY26 27 EPS estimates for the counter as well by 7 to 14% as well. Macquarie has also given out a neutral call on the counter with about a target price of about 990 rupees per share, given that they believe that the PAT has been a miss. Driven by the higher OpEx as well, and the stock appears quite expensive at the current levels. So yes, all in all, brokerages have been quite negative on the counter. Nuvama has also given a downgrade, downgrade to about hold rating and a target price of about 1,025 rupees per share. But yes, Rajesh, coming back to you for SBI cards, how does the counter look like on the charts? Today we are seeing some negative moves, 3% decline coming in.
Stock, if you analyze on the near-term, short-term structure, yes, still consolidation is happening in this counter. On the higher side, 930, 940 zone is the major supply zone. So until the stock not crosses above 940, we may witness some more consolidation going forward. On the downside, 875 is the key support area for this consolidation. So I think for next couple of weeks, 875 to 940 would be the range for the stock. Either side breakout will decide the major direction for the counter. But looking at the near term, short term structure, I think stock has potential to give breakout above 940, and once that happen, I think rally can extend to 980, 1000 level also. So at this juncture, those who are already on the long side of trade can hold the position with strict stop loss of 890 if the positions are for trading point of view. And those who wants to buy can wait for minor decline towards 890, where one can deploy some long trade with stop loss of 875.
Okay, stop loss of 875 for SBI cards. All right. Let's move on and address another viewer query then. Now we have CSAT who's been asking the view if whether or not it is an advisable time to shift from Kirloskar oil engines to Voltas Ampere. So for the next 12 to 18 months, Kirloskar oil engines, of course, the stock has been an underperformer. Rajesh, what would you suggest him to do at this point of time?
Yeah, since last couple of week, stock is trading in very narrow price range, and stock is consolidating in range of 855 to 920 zone. Stock not able to give breakout over 925 on the near term as well as on the short term chart. So any breakout over 925 can take this stock further higher. Though, if we analyze the long-term structure, stock is in bullish trajectory, but for near-term to short-term perspective, I think consolidation is likely to be there. As I can see on a monthly chart also, this is the fourth consecutive month that stock is consolidating in tight range. So wait for breakout of 925, 930 zone. If that happens, I think one can add more position as long-term structure is bullish. And I think that breakout can take this stock higher towards 980, 990 zone. So wait for breakout to add more position. You can keep a stop loss towards 865 if you are a positional trader.
Okay, all right. That's the view coming in for the counter. Let's move on and talk about Hindustan Copper as well because we've had a viewer query on this. We've had Alex who's asking the view on Hindustan Copper on how the counter looks like and what is the next major levels to watch for the long-term horizon as well. Hindustan Copper, Rajesh, how does the counter look like? Because we've seen a strong rally in the past 1 month itself. So what should investors do? Time to book profits?
Uh, yes, there was a strong rally in this counter, but still, if we analyze the near-term, short-term structure, stock is consolidating post this rally, and still stock is holding the strength on the weekly chart. So till stock is holding above 335, I think one can hold the position. Keep your stop loss around 335. Any breakout above 355 can take this stock further higher to 365, 370 zone also. Near term, short term structures are looking bullish. So hold the position with trailing stop loss of 335.
Okay, 335 is the trading stop loss that is coming in for Hindustan Copper, so we'll be watching out for that as well. All right, let's move on and talk about the next viewer query that we have. Satvika has been asking about GPT healthcare on how the counter looks like on the charts as well. Rajesh, what would you say, GPT healthcare, and for the near term perspective as well?
So looking at the near-term structure, still stock is consolidating and facing a resistance around 155, 160 zone. So until the stock not crosses above 155 level, trend is likely to remain, on a consolidation only. On the downside, the critical support area is placed at around 142. Any breakdown below 142 can, drag stock further lower to 130 level also. So my advice would be avoid at this juncture until the stock not crosses above 160.
Okay, all right. Until the stock doesn't cross 160, that is the view coming in for GPT Healthcare. All right, let's move on and talk about the next viewer query. We've had Setha Ramulu who's been asking the view on Force Motors and how the counter looks like on the near-term perspective. Of course, the stock has been on a strong bull run for this so far this year as well. And if you look at today, the stock is showing good moves, nearly a 0.5% gains coming in there for the counter. Rajesh, what is your view on Force Motors? Strong rally ahead. What can we expect the counter to be?
So since last couple of week, we are witnessing that stock is still not able to cross its major supply zone, which is placed at around 16,800, 17,000 zone. So until the stock not crosses above 17,000 level, I think we may see further more consolidation on the near term as well as on the short term perspective. On the downside, 15,840 would be the major support area for this consolidation. Any breakdown below 15,840 can take stock further lower. Stock is still struggling to cross its 20-day, 50-day moving average in this recovery. So I think wait for breakout above 16,800, then one can add more position. Those who are already on the long side of trade should follow the stop loss of 15,840.
Okay, all right. That's the view coming in for Force Motors. Let's take another viewer query. We have Aisha who's been asking the view on DLF or Soba, which is a better bet from a short-term perspective. Rajesh, what would you be liking from the realty space, DLF or Soba, and how do they look like on the charts right now?
DLF is also looking bullish, as well as if we analyze the other real estate stocks, I think Prestige is also looking attractive from this pack. We believe that real estate is a space where a lot of accumulation activity has been done in last couple of week, and going forward we could see a good amount of rally to unfold in the most of the real estate space. So I think yes, DLF is looking attractive. 765 needs to keep as a stop loss to buy and accumulate this counter. On the higher side, once stock crosses above 800 zone, I think really can extend further to 830, 840 zone also. Prestige is now approaching towards its immediate supply zone of 1800, 1840, 1815 zone. So any breakout above 1815 can take Prestige further higher towards 1870 also. This is the fifth consecutive week where stock is making higher high low formation, which is a sign of sustained buying action taking place. So Prestige is also looking attractive from this basket. So one can buy and accumulate with stop loss of 1750.
Okay, 1750 for Prestige Estates. All right. Let's move on and talk about the next viewer query then. We have Shushma who's been asking the view on Aarti Industries because she's sitting on a loss of about 50%. She's asking whether it is a buy or a sell for the counter. Rajesh, what would your views be? Because the stock has entered a lower consolidation zone, oscillating between 370 to 380 rupees per mark. So, what would you suggest? Is it a time to book some losses?
So, almost since last 8 to 12 week, stock is still in consolidation, not able to give breakout of this consolidation. Looking at the price behavior, I think 395 is the immediate hurdle for the stock. If stock crosses about 395, yes, there would be a breakout, and then possible really can extend to 415, 420 zone. But till the breakout is not happening, I think one can wait for breakout to happen and then buy. On the downside, 365 needs to keep as a stop loss if you are already on the long side of trade.
Okay, all right. That's the view for Aarti Industries. Let's move on and take the next viewer query right now. We have Booth Banker who's been asking the view on DOMS Industries because he's had 78 shares of the counter at rupees 25 rupees per mark, and he's asking whether it will hit 3,000 mark in the upcoming sessions. Rajesh, what is your view on the counter? 3,000 mark, can we expect? Because the stock has been an underperformer so far this year.
Yeah, so since last couple of month, stock is underperforming and consolidating in range only. Stock is consolidating in range of 2650 on the high side and on the downside 2350. So if your horizon is for little longer period, yes, you can hold on the position to regain the strength towards 3000 mark also, but it may take time. It's not going to happen in near term perspective. You have to wait for another 6 month to 8 month kind of time frame. If you're already on the long side of trade, 3350 needs to keep as a stop loss. On the breakout about 2650, you can add more position, and then yes, possible extension of rally towards 2750, even 3000 we may see in the next couple of months. But if your horizon is positional perspective, then you can buy an equivalent.
Okay, all right. Buy and accumulate for Dom's Industries. Let's take another viewer query. We have Sushma has been asking the view on Geo Financial Services because the buying price has been about 244 rupees per share, asking whether it should book profits and buy 361 or add Shriram Finance on that perspective. Rajesh, how does the counter look like? Geo Financial Services, if you look at from a YTD perspective, the stock has been flat but with a positive bias.
So if your horizon is for a short-term period, yes, you can switch to Shriram Finance. But if you are looking for investment perspective, you can remain invested in Geo Financial. As already stock is in consolidation for last couple of months, and any breakout above 320 can take this stock further higher to 355, 360 zone also. But for trading point of view, Shriram Finance is looking more attractive as the stock is now negotiating with its multiple supply zone of 728. Any breakout above 728 can take this stock further higher, and possible extension of rally towards 777, 80 we may see in the near term perspective. So Shriram Finance is looking more promising for the near term perspective, but for longer term perspective, you can hold your position for Geo Finance also. We may see breakout going forward above 320, and once that happen, rally can extend to 355, 360.
Okay, all right. Thank you coming in. All right, just one last question before we let you go, Rajesh. What are your topics? Anything that you're finding interesting now that we're deep into the earnings season?
I think Laurus Lab is looking promising. The way stock is showing strength, and now almost stock is back at its all-time high trajectory. I think this stock has potential to extend its gain. We are projecting target of 1000 for Laurus Lab. Buy and accumulate would be the strategy. On the downside, 925 needs to keep as a stop loss for Laurus Lab. Again, some of the platform company like CDSL, BSC is looking promising. These stocks are showing a sign of buying interest, and the way CDSL is now trading above 1600 level, I think here we could see extension of rally towards 1670. On the downside, one needs to keep his stop loss towards 1580. From telecom space, I think Indus Tower is looking interesting. The way consolidation is happening since last couple of days, I think stock is poised for giving a breakout above 365. Once this breakout happens, I think we may see extension of rally towards 380, 385 zone also for Indus Tower. So buy and accumulate would be the strategy for Indus Tower. On the downside, 348 needs to keep as a stop loss. And the last one is from real estate space. As I already mentioned that, we believe that, real estate is a space where we could see a good rally across the sector. So Oberoi Realty is also looking promising. Already breakout is taken place on the daily chart, and we believe that, till stock is holding above 1700 mark, here we can see a rally towards 1800, 1820 kind of zone. So buy and accumulate is the strategy for Oberoi Realty with stop loss of 1700.
Okay, all right, all right. Those are the stocks that we need to watch out for. But yes, so with that, we have to let you go. Rajesh, thank you so much for your time and joining us.
Thank you.
All right, before we take a quick market check, let me also introduce you to our Money Control Super Pro, which can be your ultimate investment destination. You can get all the live trading calls and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Money Control app and subscribe to Super Pro today itself. All right, let's take a quick check of the markets before we move on to our second guest of the show. If you look at Sensex, it's holding on strong with about 400 points gain. Nifty is also doing well with about 100 points gain as well. 0.5% gains coming in from there as well. Nifty above that 25,900 mark. So we started off with about 25,800, and when we have mounted above that 25,900. So it's a positive start to the week as well. If you look at sectorally, it has been a positive day as well. If you look at majority of the sectors, they are doing well. Bank Nifty index definitely leading the gains with about 0.5% gains coming in from there itself. Yeah, we did see there some performance of the banking heavyweights over the weekend and last week as well. Nifty IT index also showing some good gains with about 0.5% gains. On the other hand, if you look at Nifty Pharma index, flat but with a negative bias as of now. Nifty FMCG index with about flat with a positive bias. Nifty Realty also doing well with about 0.5% gains as well. Broader end of the markets, if you look at mid cap and small caps, both of them showcasing gain of about 0.5% each as well. But with that, let's quickly move on to our second guest of the show. Joining me is Gaurang Shah of Geojit Financial Services. Gaurang, good morning. So good to have you here. I'll start off with the first question that we are deep into the earnings season, and the headline indices are already on the course to register best monthly performance since March. So how are you reading into the second quarter performance, and what does it mean for the upcoming quarters as well?
Thank you so much for having me on the show this morning. Morning to you and to all the viewers of the show. A small disclosure before I go any further. All recommendations that I'll be giving this morning are a part of our research team recommendations. Our company Geojit or I, we do not have any personal investments. No conflict of interest and no financial interest, but we give recommendations to our clients on similar lines. They might hold their investment portfolio accordingly. So I think we've already seen a 52-week high last week when we were able to go slightly above 26,100. All-time high remains to be conquered in terms of the level of 26,277 on the Nifty spot. And I think that will come sooner rather than later. There is news flows with respect to US and China agreeing for a trade deal. I hope it happens soon, and thereafter between India and US. Your question on the earnings front, I think it has been a shade better than what the street had estimated, especially with respect to certain sectors like IT, where there was a little bit of concern in terms of downtick. But I think whatever we've seen up till now, minus Wipro, has been much better than what the street estimates were. Some of the other sectors and companies that have delivered, even they have done much better. Expecting the third and the fourth quarter to do a better number and a color and a shade than what we have delivered right now. And the next financial year will be a game changer because we'll have budget unfolding next year in the month of Feb. And over there, I think reforms and creating employment opportunity and making investment into India easy will drive the policies forward. We are at 25,900 as we speak on the Nifty spot. I think we should consolidate over here given the kind of run up that we've seen over the last couple of days. And it's good for the market health. I think we'll make a base and then eventually make a new all-time high. Our guess is that by the time we say goodbye to this year, 2025, that is by December 2025, we should see a new all-time high on both Sensex and Nifty.
Okay. Okay, all right. Gaurang, we've had some banking, big banks reporting numbers last week as well. So, how do you see financials going into the second half? And what would you say the hits and misses of the second quarter were there for the financials?
Well, so our understanding was before the earnings for the second quarter in form of curtain raiser started, our view was that banking and finance universe is going to do extremely well. That's the entire BFSI segment. And that includes your strong NBFCs, that includes your private sector banks, public sector banks. And I think whatever we've seen in terms of the numbers, what we have coverage under, to be very honest, has been, again, we saw Kotak Mahindra Bank day before yesterday on Saturday. That was also much better than what the street estimates. And given the fact that you are going to see an increased demand in terms of loan book growth, the fact that you are going to see lower gross and net NPAs, and the fact that because of the lower gross and net NPAs, the provisions that were provided in the history are going to come back and make the balance sheet strong. And of course, we are in an interest cut cycle. Expect another rate cut to come through by December 25 from the Monetary Policy Committee. So we are possibly positioning ourselves for a better earnings growth for the entire BFSI segment. So we have coverage on private sector bank, public sector bank. Strong NBFCs are also something that you should look out for. And along with that, some well-established microfinance companies.
Okay, okay. All right. Gaurang, apart from the financials, if you look at staples per se, FMCG that continues to remain a laggard. So, can we expect this to remain the same as we go into the second half?
Well, not only the second half, but going into the next financial and, of course, the future earnings. And the reason why we say that is, look, it was on 22nd of September that we had the new avatar of GST 2.0 unfolding. Before that, we had good monsoon. Before that, we had a big announcement made by the Honorable Finance Minister Srimati Nirmala Sitharamanji in form of tax relief for all those individuals who are earning 12.75 lakhs. So you have to put all this thing into perspective and look at the future. Then I think already some signs of positivities are there in the numbers in some company with consumption, both discretionary, non-discretionary. I'll put both of them together. Effective October, November, December, when we'll see the ground level reality, as we call it, green shoots, visible in terms of consumption picking up. And from next year onwards, I think you will have a better demand coming in, which will have transformation in terms of sales number, volumes, growth, and profitability improving. Remember one thing, for the FMCG sector, there is also a tailwind positive in terms of input cost. That is raw material input cost coming down. So that their profit margins are going to be even better. So we have coverage on HUL, ITC, Godrej, Consumer, Tata Consumer, Dabur, Marico, Nestle, Britannia, amongst the non-discretionary names. Amongst the discretionary names, we are positive on Havells, Viewstar, Voltas, entry-level two-wheeler and entry-level four-wheeler manufacturing companies, and some gems and jewelry, for example, Titan Company, we are positive.
Okay, okay. Gaurang, now that we have discussed, financials and then consumption, and we've had banks also reporting, fairly better numbers than the street estimates. Any other sector that you're watching out from the Q2?
Yeah, so according to us, we have listed down some 6 odd sectors which are likely to perform much better than compared to the market and other sectors. So which are those sectors? We've spoken about entire BFSI segment, banking and finance. We've spoken about consumption. The other sectors that we are positive are defense, cap goods engineering, power, cement, and autos. These are the other sectors along with the two that we already discussed. And our view is that amongst all these 6 or 7 odd sectors, the top 3 performing sectors for the next 2-3 years or maybe more will definitely be defense, cap goods engineering, and capital market related stocks. Because eventually, look, if we have a view that we are going to grow at a very decent pace, and on a conservative side, after things settle down with trade policy, etc., if you register a growth rate of anywhere between 12 to 15% on Sensex and Nifty, I'm talking about, of course, sector and stock specific, you will get better return. Then I think your entire, strong companies which are associated with the stock market, they're also likely to do well.
Okay. Gaurang, we've had a softer inflation report that came in from the US as well, and now all eyes are on the US Fed Reserve, which will be meeting on Wednesday itself. Are you expecting a rate cut or not?
I think it's going to be a wait and watch, to be very honest. Look, whatever is happening in terms of Trump or trade policies will start taking its effect as we go into the future, in terms of whether the inflation is going to stay benign or it's going to go up, whether the citizens of America are going to have a decent life in terms of health, in terms of whatever their daily consumption needs are, and so forth. And honestly, rate cuts, whether it is in US, whether it is in Europe, or whether it is in India, or whether it is elsewhere, the authorities look at a long-term data point and take a call. So I think it's going to be wait and watch for the US Fed chair, Mr. Powell, to take a call. Not now, but possibly by end of this year, I think there might be, because he's made a statement that you're going to witness 2 rate cuts this calendar year. So let's wait and watch. I think November, December, 2 more months are there. If things are conducive enough and if the data points are supportive enough, if the inflation is still benign and at a lower, then you might get 1 rate cut in November, another one in December. But it will all depend. And as he already said it's going to be data driven.
Okay. All right, just one last question before we let you go, Gaurang. We did see that the US and EU imposing sanctions on Russia's biggest oil companies. So what does it mean for the Indian oil refiners? And of course, going ahead from a macro picture also, what does it mean for oil prices? Because we did see last week itself, 7.5% gains came in from the oil prices as well.
So I think, first of all, the better picture or the brighter picture is that OPEC has mentioned that they will continue to maintain a higher output despite of the demand being slow. Sanctions put on companies like Rosneft and one more company, I don't recollect the name, in Russia, are going to create a short to medium term vacuum in terms of demand supply matchup or a mix up. We have already been, we means our government has already been in discussion with other suppliers to make good for whatever shortages are in the pipeline with respect to we lowering our import of energy requirement from Russia with respect to crude oil and natural gas. Russia will, of course, we've heard President Putin make a statement that they will take all necessary steps to safeguard their sovereignty and their right to trade in the world economy. There are a lot of things that happen in this oil trade. High seas oil trades happen, disguising the origin, etc., etc. So we need to just wait and watch out in terms of, and more importantly, I think crude oil prices are down, $65 for Brent and NYMEX. I think that's a decent level. So we don't have to worry unless and until we see a huge spike up in crude oil prices, which looks next to impossible right now, given the events of global drawback. So we may see a vacuum short to medium term, but long term, I think we'll make it good.
Okay. All right. With that, we have to let you go, Gaurang. But thank you so much for connecting and joining with us.
Always a pleasure. Thank you so much.
All right, let's take a quick check of the markets of where we stand right now. If you look at Sensex, up about 450 points. Nifty is also doing well with about 0.5% gains as well, above that 25,900 mark as well that is coming in for the Nifty 50 index. Majority of the sectoral indices have been trading in the positive index, except your FMCG index, which is trading flat with a negative bias. Other than that, if you look at Bank Nifty index, 0.5% gains coming in for there as well. Pharma index doing well. It is back above in the positive lane with about flat with positive bias. Nifty IT index holding on strong with about nearly 1% gains or so. On the other hand, if you look at Nifty Realty Index, nearly 1% gains coming in for there as well. On the other hand, if you look at metals basket, that is one of the top sectoral movers of the day with about 1% gains as well. So all in all, if you look at the market construct, it has been a positive territory and looks like we are headed for a good start this week as well. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing. We'll understand how the market is developed and also discuss what the stocks grabbed headline. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights. Also, tune in at 4:30 p.m. for our special Money Controls Mutual Funds Summit, where we get the brightest minds to understand what your portfolio composition should look like and what is the way ahead for the markets as well.